Hello, welcome to the European Open briefing for Thursday, November 3rd. I'm Rafi Bajajan, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So the main headlines this morning is, of course, the decision by the Fed yesterday to hold rates unchanged, although this has somewhat been overshadowed by ongoing concerns about the US elections. We're seeing the dollar continuing to come under pressure as Donald Trump, the Republican nominee, is seen to be gaining further momentum in the polls. In other news, it's quite an important day for sterling as we have a number of key events. We have the Bank of England's latest policy decision coming up later in the day, and we're also going to have the High Court decision in the UK where the High Court will decide whether or not the UK government can trigger Article 50, which is the official process in initiating the Brexit, whether the government can do this without requiring a vote in Parliament. So let's begin with the dollar. We can see here that the dollar has been on a downtrend, and it's currently slipped below the key 103 level. There's continued to be concerns about the declining chances of Hillary Clinton winning the US elections. We're seeing Donald Trump running pretty much neck and neck in most polls. This has led to a bit of a rally in safe havens. Both gold and the Swiss franc are currently at 4-week highs. The gold broke above the 1300 level for the first time since October the 4th, while the US dollar against the Swiss franc fell below the 0.97 level. And we had a fairly muted response to the Fed's announcement yesterday, as most traders' minds is currently dominated by political developments. So looking at more detail at what we saw from the Fed yesterday, in the FOMC statement, the Fed sounded much more upbeat and much more confident about meeting its inflation target. The statement said that the inflation has increased somewhat, and they see a case for an increase in the federal funds rate that's continued to strengthen. So that leaves the door widely open for a rate hike in December, although there wasn't too strong a wording in the statement that suggests that a rate hike in December is a certainty, and this is likely due to the uncertainty of the US elections. As you know, if the Fed was to commit now in saying that they will raise rates in December, and we saw a surprise win by Donald Trump in the election, then it would be pretty awkward for the Fed to then decide and not to raise rates if a Trump win was to lead to increased volatility in financial markets. So we have basically a cautious note that December rate hike is on the way if Clinton was to win the elections. Now, another currency coming under focus is sterling, because we do have a very important decision by the UK High Court. The UK government is being taken to court over its decision not to ask Parliament to vote over the triggering of Article 50. If the High Court rules against the government, this could potentially lead to a delay in starting the Brexit process, and also could complicate things for the government, and it could potentially lead to further volatility for sterling over the coming months. And of course, we also have the Bank of England decision later today. Now, if you remember back in August, the Bank of England had given quite clear signals that it will probably ease policy further later in the year, most likely in November, although now that's become fairly unlikely because the UK economy is doing fairly well. There hasn't been a major impact from Brexit so far, so the Bank of England is likely to hold rates at 0.25% and also hold its asset purchases unchanged as well. We also have service PMI out from the UK later today, so those will also be watched, given that the services sector is very important for the UK economy. Now let's have a quick look at crude oil. Crude oil, we saw that big dip yesterday. That came after the latest EIA inventories data, which showed US stocks rose by 14.42 million barrels versus expectations that they would rise by just 1 million. So that's quite a big difference between how much crude stocks rose given expectations. Although we saw that crude oil has since recovered somewhat, and that's mainly due to the weaker dollar, which is boosting commodity prices. But we also have some reports of disruptions in Nigeria due to pipeline explosions because of geopolitical events there. So that's provided a bit of a boost to crude oil, which is currently trading around $45.50 a barrel. Now looking at the Australian and New Zealand dollars, both of them are rising despite there still being some risk off mood today in the markets. We did have some positive Chinese services PMI, so that did help risk sentiment a little bit, but we also had some positive data for both Australia and New Zealand. The Australian trade deficit was much smaller than expected in September. In New Zealand, labour costs were slightly weaker than expected, though this didn't hurt the Kiwi too much because we had yesterday strong jobs data, also as well as a big rise in dairy prices. So the overall outlook for New Zealand economy is looking fairly well. And although the Reserve Bank of New Zealand is expected to cut rates next week when it meets on November the 10th, traders are now expecting that the AUDNZD will signal less cuts further down, so that's boosting the Kiwi, which is currently at 5-week highs, and the Aussie is currently holding comfortably about the 0.76 level. It's looking like a busy day for today's economic calendar. We can see there the data out already for New Zealand and Australia. We've got the UK Services PMI coming up shortly, which is expected to be 52.4, slightly weaker than in September. We've got the Eurozone unemployment rate, and then followed by the Bank of England decision, where they're expected to hold rates at 0.25%. And it's going to be quite a big day for US data. We have the weekly jobless claims. We've got the final market services PMI. We've got factory orders, and we're also going to have the important ISM non-manufacturing PMI. That's expected to ease slightly from 57.1 to 56.0 in October. Again, as with the non-farm payrolls data that's due tomorrow, the ISM non-manufacturing normally would have had major impact on the dollar, though we're likely to see muted response again, given that the main worry for investors right now is the US elections. So that's it from me for today. Thank you very much for watching and have a great day.